Hello and welcome to Building Tomorrow's Insurer, where we explore the cutting edge of insurtech and digital innovation in the insurance industry. I am your host, Nigel Fellowes-Freaman, and today we are diving into the very, very crucial topic that is maybe the most rapidly evolving and reshaping part of the insurance landscape today, and that is risk management and cyber insurance. Today we are joined by Meena Wahi, who is a nationally recognized cyber risk advisor, and she is none other than founder of Cyber Data Risk Managers. She has an enormous depth of experience in navigating these kind of complexities within cyber and data privacy, and we'll try and touch through the conversation on the rise in global cyber threats, how that's driving policy innovation, how it's driving the role of cyber resilience, and finally, how and what do carriers, humans, businesses need to do to stay in front of this curve of this continually growing cyber insurance risk. So Meena, thank you so much for being here today. I really appreciate it.
Nigel, it's a pleasure to have this opportunity and be able to share my views.
Fantastic. Would you mind sharing with us just a little bit of your story of where you started, how you grew within the industry, and then how you landed in this incredible field of cyber insurance?
Yes, I agree. It's an interesting story because I did my MBA at Monash University, and I worked for a while with Pricewaterhouse as a consultant, but then that didn't last very long. And what I started doing was researching future trends and how they would impact businesses. And in doing so, I also started doing work for the government. And one of the projects I was working on was for an agency that wanted to know how the change in the privacy legislation would impact their business, because they were custodians of healthcare data from Medicare. And I started doing my research, and I obviously looked at privacy legislations all over the world. HIPAA was existing in the US. The privacy legislation changes in Australia were coming, and GDPR was still being talked about. So that alerted me to an opportunity as a future trend that, the legislation changes would impact on how businesses would deal with data and data security. And then I met online a person called Christine Marciano, who's based in the US and is a cyber broker in New York. And I said, to her, can I please, talk to you? I'm just researching this topic for a client. And as we started talking, I finished the project, and then we continued the conversation because I was very interested in learning about what she was doing. She invited me over to New York. Can you imagine? And there I was in New York learning about cyber insurance, going around town, meeting with AIG, Chubb, local insurers, doing presentations. And of course, going to New York and meeting with a whole lot of interesting people. And I came back and I said, this was 2013, mind you, and no one was doing cyber insurance. So I was the first cyber insurance broker in Australia. And then I went around knocking at doors of AIG, Chubb, Dual Australia was there. Emergence had just opened shop, and they were very impressed that there was a broker willing to nurture the space, and I'm still nurturing it, Nigel.
That is wonderful. And Emergence as a business has gone from strength to strength. And so, yeah, you were, it sounds like you were, both at the early stages together. And Meena, can you maybe talk about how you've seen, obviously you're there at the beginning, especially in the Australian market. And when I say the beginning, it sounds like it's a very long time ago, but I suppose the beginning of cyber maybe being taken a little bit more seriously in terms of kind of data and protection and insurances, etc. Can you talk to me how that, over this last decade, from 2013 till now, how kind of the cyber industry has evolved, maybe in terms of risks, coverages, how businesses and carriers are thinking about it?
Yeah, and I think it's the perspective that counts, Nigel. To answer your question, it depends on if you're looking at the cyber market from a London perspective, a Lloyd's of London perspective, or are you looking at cyber wording, cyber policies, and how they're evolving from a local perspective? Because I was in London in September last year, and I went around town meeting with various underwriters and insurers, and CFC had their summit happening in London at that time, and it was focusing totally on cyber. And I met the team like Philippa and the others. I met with them, and CFC is a pioneer as far as cyber is concerned. So learning from their perspective and then coming here and seeing a whole lot of evolution happening in wording, in the wording for cyber is interesting, because I find that London markets are struggling in terms of market share, that who's going to keep the market share for cyber, and CFC being a market leader are coming with really forward sounding wording which reflect what clients want, and therefore there's a struggle there for market share. And I think the likes of CFC are proving that to be market leaders in London, they have to continuously evolve their wordings and come out with something better. And here we have Emergence and Dual doing the same. But it's a global phenomenon, because one virus can wipe out the computers all over the world within like a day, and insurers are responding, trying to catch up. So there's definitely that focus on cyber incident response and reputational damage, I think, which is reflective of how cyber risk is impacting businesses, because they're being forced to respond very quickly to a cyber outage or to a cyber incident, and the impact of that as reputational loss is being reflected through wording that there's very clear wording in CFC. Some of the local insurers like Coalition, who are in town, are very keen to fill the void. So I think a whole lot of insurers are trying their best to cater to this market. Coalition has cyber risk assessment reports that they give out along with their policies. So I feel there's a whole lot of evolution happening. The market share will go to the specialists. Like I, as a broker too, I feel it pays to be a specialist in the area of cyber insurance. And I recently opened another brokerage catering to the intellectual property risk market. So specialization, I think, ultimately is driving this space.
Super, super interesting. And you mentioned there are a few specialist MGAs in this space. Obviously, you mentioned kind of Emergence a decade ago, and now we've kind of got CFC and a Coalition. Is there kind of, when you look at that in this market, are there more and more of those specialist folks now writing business here in this market specifically, or is it staying pretty niche in kind of 3, 4, 5 folks?
It is staying niche, but there's potential for others who are looking at the market. Like I know that a few insurers are trying to expand their offering, but ultimately it's going to be a specialist market. And the reason being, Nigel, that the aggregated risk that cyber is, what will happen is that if an insurer is writing cyber and they don't understand cyber, and there's a virus that goes around town and they have 1,000 claims in one day because they got cyber policies, and they may be facing huge losses. So they look at, cyber versus rest of their books. And if cyber is the loss-making book, they'd say it doesn't reflect well on our business. While the specialists are saying, if you're only doing cyber, then that is the book that we have to focus on. So they're taking away market share from the non-specialists by coming out with better wording, reducing their cost, and also catering to the market with their commitment. So the non-specialist is saying it's not worth a while because it's too expensive a risk and it reflects badly on the bottom line. We're making money out of other classes of insurance. So I think it's a specialist market and it will stay like that. Any insurer who's trying to make money out of cyber will have to be a specialist. And look, that's my broker perspective. I'm not an insurer. I must have put in a disclaimer that's a broker's understanding of the market, and especially with my research in London, where I go and talk to a whole lot of insurers. That is my perspective.
That makes complete sense. And you mentioned a couple of sentences ago around coverage. And I was doing a little reading before we jumped on. And I read a statistic that jumped out on me that I'm interested to get your thoughts on. And that was in 2017, there were 4 billion individual data breaches globally. And that it blew me away. And obviously there was I know kind of maybe, I think $500 million of US dollar claims on those breaches. And so giving that massive rise, and that was kind of 5 or 6 years ago, how have you seen, you've touched on it, but I'd love to get a little bit of depth on there of how the policies are evolving with this dramatic rise in breaches. Are there any real kind of key changes and trends that you're seeing in terms of coverages to reflect this kind of real increase in the breaches?
Yes, absolutely. I feel that supply chain risk has increased, Nigel. So, I mean, let's step back a bit. And cyber insurance is really about offsetting the loss of cyber risk, and that means cyber incidents, hacking incidents, human error. But underpinning that is that we're trying to leverage the internet as a society, as the economy evolves. We are looking at internet as a means to grow businesses and offer better value to customers. So in doing that, we're trying to leverage upon the internet. And how do you ensure the internet? It's like huge, it's fragmented, isn't it? And it consists of a whole lot of computers that are connected to each other, and a whole lot of businesses that are offering value to the end customer through collaborations, formal and informal, direct and indirect. So in doing that, what happens is that the risk is also fragmented, so understood. But what about the ownership of the risk? If that is fragmented, who's going to own up to the risk of where the cyber incident originated and where did it end up? And then the liability. So who do you pass on the liability to? Because you're holding third-party data. So if your partners in the supply chain, in the IT supply chain, somebody's customer's data could be used by another party to offer a solution to, someone else. So the fragmented nature means that the ownership of liability and risk is not understood, is not very clear. Therefore, in terms of the wording, IT supply chain partners, contingent business interruption, all those wordings are reflective of the understanding that insurers have that data does pass hands, and IT infrastructure, the cloud, are third party, and they're not owned by the client. So there could be an impact of a cyber incident at the third party infrastructure, virtual location, that is, onto another business. So how do you quantify that risk? How do you qualify the risk? So it's really heartening to know that insurers are covering IT supply chains and contingent business interruptions as part of the wording.
Yeah, we know that only too well. As a business, obviously, we're just right in that sweet spot you just mentioned in terms of technology business that holds a bunch of customer data, and therefore all of our contracts are very very structured around that liability and around how that's looked after and covered and signed off in terms of from a cyber insurance perspective, as well as a security posture and cyber security posture, etc. And as an extension of that, have you got a view on how CPS 230 is going to impact that? Obviously, CPS 230 is impacting the value chain of technology vendors that are working with these carriers. Have you got a view on any of the wordings and requirements of that supply chain based out of the CPS 230?
Absolutely. CPS 234, CPS 230 prudential standards that they are for information security. APRA has played a big part. And specifically for sectors like the financial services and regulations that impact the health sector. Uh, it's um, it's interesting to note that even small medical practices, for example, are covered by privacy legislation. Financial services are covered by the prudential regulations introduced by EPRA. So, to answer your question, my view is that in general, any prudential standards, guidelines, compliance requirements, legislations are going to drive the demand for cyber insurance, because in the US, regulatory fines and legal fees are the highest costs of a cyber incident. So, in terms of claims data, the highest claims do tend to be regulatory fines pertaining to prudential standards or legislations or compliance requirements. But my view is that our, in Australia, the regulators, the commissioners, are rather benign and friendly. So we don't have companies going bankrupt because they've been fined a certain amount because they didn't keep up with the information security requirements as stipulated by a prudential standard. So we, as a cyber insurance broker, I like to see my clients say, oh, we could be fined an X amount. So is $1 million enough? How much do we have for legal liability? How much do we have for privacy liability? Do we have enough for regulatory fines? And I don't get asked those questions. It's like we need cyber insurance. So it has to work both ways. So it's great to have information security requirements for the board, for financial services, for the health sector. But unless we're going to have fines, what's the point of having all these legislations and compliance requirements? But having said that, that's changing, and obviously there's more awareness now around compliance obligations and regulatory obligations.
Yeah, more coming. And do you think that regulatory oversight increasing, as it probably should, both increasing in terms of legislation as well as, I suppose, the underpinning fines, etc., for non-conformance? Do you think that will aid innovation in the space, or do you think it will hinder? Because sometimes you find regulation actually drives innovation. It drives folks to work within that framework, but sometimes obviously it can act as a drag. Have you got a view or an opinion on how that regulatory oversight will play in the evolution of cyber insurance policies?
Good question. Let's get another perspective. Let's look at a board perspective. So I'm a company monitor with Australian Shareholder Association, and last year I had the opportunity to go to AGMs and interact with chairs of ASX 200. And in doing that, when I interacted with the chairs outside of the AGMs, it was interesting to learn from them that they were the companies were investing in CISOs and cyber insurance, and they were all across the cost of cyber incidents. But my sense is that we're seeing a generation change as well, like the boards that we have and the brokers that we have in town are probably slightly old-fashioned. It's like they were all part of the growth of the enterprise using e-commerce and internet as a technology. But to now be across the risk and liability that internet brings is another learning curve. So I think the question is more about the skill matrix and its understanding of the collective competence that we have in this space, where everyone understands the risk and liability associated with the internet, and how as a country we wish to harness that for the economy, for the government, for small business, and what it means. So these regulations do tend to alert businesses and small businesses and the government on obligations and compliance requirements. and therefore tend to harness that creativity to keep it safe for everyone, so that if there is a fine, that at least businesses are aware of their obligations and their responsibility towards, holding on to the data that they have and keeping their IT infrastructure safe.
Makes sense. It makes sense. And was there any other kind of key nuggets that came out of those AGMs? Obviously, you were in there speaking to the folks who are running, managing, owning that compliance risk on the top end of town, that AXX 200. Was there anything that really jumped out apart from obviously the thing you mentioned there around maybe generational gaps? Was there anything else that really stood out for you?
Well, what was interesting was that they had their CISOs, like the Chief Information Security Officers, present at the AGM. So I felt like the CISO is definitely part of the executive team and is informing the decision making. But there was also that sense that the board had to be across cyber risk. And I think there's a gap in terms of how the information is flowing from the organization upwards to the board, and how the oversight is percolating downwards from the board to the organization. And if the oversight is not percolating down, the compliance requirements aren't really going to the level that they should. And if the information is not flowing upwards correctly to the board, then the board can't provide oversight because they're not across what's happening, what the real story is. And there's a gap there. And as a cyber insurance broker, I try to challenge myself and try to understand how insurance can be that protection mechanism in like the gaps that they are within large and small and medium-sized organization, by being an offset. Because if there's a compliance gap or there's a cyber incident, cyber insurance is definitely an offset and a support and a protection mechanism for all sorts of organizations. So, my ambition really is to maybe one day I'll insure a bank or a large ASX 100 company, and be able to, clarify to the board exactly where the gaps are and how information flows up and oversight flows down, and in between, where does the non-compliance or non-conformity to compliance happens, but also where there is potential for a cyber incident or human error, and how does insurance really, as a spread of policy wording, cater to those risks.
Totally. It's super interesting. Taking a little step to the left, and this pod's been pretty successful because I'm not scared of asking questions that everyone wants to know, but not many people ask. And one of those in this space is cyber resilience. Everyone throws it around. I'm not sure how many people really understand it as a term in terms of what it means and why it should be a priority. Can you shine the light? Can you shine the light for the listeners of what is cyber resilience and what does it mean and why should it be a priority?
Resilience is as a term, like, what do you think resilience means as a term in the broader context, Nigel?
Well, good question. What do I think it means? I think it means the both, it may be from two angles. Resilience is both the resilience of like a first line of protection in terms of resilience of something's not happening, and then resilience of if something does happen, how do you recover? That's kind of what my view of kind of what resilience would be.
Yeah, I mean, that ability to protect yourself, to have the resources, to have the ability to be resourceful, really, I think is resilience.
Mm.
because the more resourceful you are, the more knowledge you have as a business on how to do what to do and how to do and when to do makes you resilience,
Mhm.
makes you resilient and gives you the resilience. So I reckon the first possible scenario is that if a business has faces a business faces potential loss through a cyber incident, their first question is, can we survive this? Can we come out of this as a business that is still functional, profitable, and meets the needs of its customers? And can we still keep the trust of our customers? So underpinning that is, how soon can you bounce back after a cyber incident? And that's not bouncing back because you're, a great organization. It is, have you quantified how long will your business be interrupted after a cyber incident? And if the business interruption goes beyond a certain point, what can you do? So it's about having a risk register and quantifying risk and knowing that what is your level of risk acceptance. I think resilience and being resilient is all about level of risk acceptance, and it can be relative. So if you have a policy wording that provides you level of cover for 3 months of business interruption, that is protection. But you should be able to be up and running as a business after a cyber incident within hours, because then you're resilient and you're also keeping the trust of your customers that you're able to serve their needs and of the community, and your board can answer to your stakeholders like shareholders. But if your risk statement says to you that, we'll accept risk up to a month, and you bounce back after a month, that's still being resilient because you have kept up to your risk statement, you have accepted risk, and you have been able to come back after a cyber incident after a month. So really, I think at the end of the day, it's about the risk statement and risk acceptance.
Now when we put this in there, this call in the diary, Meena, the one question I was so looking forward to asking you, because it's on the lips of every exec, I'm sure, especially those folks who use the Microsoft suite. CrowdStrike. What was your view? What did you think? What do you think is going to be the outshot? What do you think talk to me. How did you see it? How did you see it handled? How did you see what are the knock-on effects going to be? I'm just very interested in your perspective.
Yes, I think it really finally what it showed us was the global nature of the internet and how uh, you know um, how cyber incidents or outages aren't going to be confined to national boundaries. It's going to be a global risk, and it is a global risk. I mean, the um, sooner there is that collective sort of acceptance, we'll go beyond defining cyber risk as confined to the boundaries of a small business. It's not that. Secondly, what it is that it alerted us to how insurers work, and it's all about definitions. How do you define an outage versus a cyber incident? So was it an outage, a technical glitch, or an outage, or was it a cyber incident? And does your policy cover technical outages?
Outage.
Yes, outage. And so really it's about definitions, and it is about boundaries, and it's asking that question, when is the next one, and how well prepared are we for the next one? So for me and my clients, is the important thing is that how well did we respond, how were we impacted, did we have to make a claim, and are we prepared for the next one or not?
Yeah, I think that was the big call out for me. Was and it showed in all the conversations that have happened after, which is it's now really, if it was number 4 or 5 on the priority list of something we should think about, but maybe it's not number 1 priority, all of a sudden it became very close to the top around A, how do we not let it happen? B, kind of what resilience or protections we've got in place. Is the wording we've got correct? I imagine there's a lot of risk and compliance folks scrambling around making sure that everything is in place. So I think hopefully it's done a good job of raising some profile. But on the other end of the spectrum, obviously there was an enormous range of businesses that were affected like an outage like that. But when kind of we sit down and speak to folks, especially in the smaller end of town, like the startups, the SMEs, it seems that there's not much education there. It seems that there's a lack of understanding of maybe the importance of cyber insurance. And so, and I'm sure that many folks that you speak to, part of your job, I imagine, is education, is really kind of trying to talk to these folks around what is their risk posture and how do they need to try and mitigate it. Have you got any advice, or maybe the top 2 or 3 things that a startup or an SME should be thinking about when thinking about cyber insurance and getting them the right coverage?
Yes, I think, Nigel, the question is also about level of implementation or level of cyber risk maturity. So, are small businesses implementing cybersecurity? Are they able to access affordable cybersecurity solutions? And do they all have cyber insurance? So I know that there have been some discussions around mandating cyber security and cyber insurance, and there's been talk about rebates being introduced for cyber insurance. So educating small businesses is all about, like we're talking now, going to conferences, speaking at conferences, doing lots of white papers, conversations, roundtables. But the education part is very important, but education is different from training. So are we introducing enough training for clients? And if we have proper training, what does that entail? And does that lead to, implementation of cybersecurity? So really, I think what will motivate SMEs to implement cybersecurity and take up cyber insurance and therefore be able to protect their businesses, what motivates them and how will it happen? That is a question, but everyone's doing their best. I think this podcast, of course, is an example of that. So it's changing, but it's not exactly where we want things to be.
Yeah, and on that point of affordability, we hear kind of rumbles of affordability being a real challenge. Is that something you see with that your smaller clients, like affordability being a reason not to protect? Does that come into the equation?
Yes, I think affordability has always been an issue with small business. They have always viewed insurance as an expense unless it's mandated, and then it's maybe an expense that is that has to be borne, like whether they like it or not. So I wish every business in Australia had cyber insurance, but they don't, and I'm worried that lots of businesses are underinsured. So I love to be able to do a health check on cyber insurance for those businesses who think that they've got cyber insurance, because I do get lots of clients who've got 250K worth of cyber insurance as an extension on their PI policy, and it doesn't cover them for much. So clients, businesses who think they've got insurance should have that looked at, and larger businesses must then look at doing a risk register and quantifying how much insurance they need, because they may be underinsured in terms of the limit that they've got. and a whole lot of other conversations that can happen in terms of underinsurance, lack of insurance, or how to best use your insurance.
Yeah, all of the above. I'd love to gaze into the future, Meena. What do you see as the trends within cyber insurance? How can insurers prepare for these changes that are coming?
The future is definitely a closer connection between cybersecurity and cyber insurance. So one can't exist without the other. And I feel that insurers might foray into cybersecurity by providing more tools pre-breach and post-breach. And cybersecurity companies might have a connection with a mechanism for transferring risk for the clients. There might be a layer of warranties insurance that would come in, where cybersecurity providers will say that we warrant you that we will do our best for you, but should there be a cyber incident, then we provide a warranty that will cover you for the loss. So so those sort of things are coming, but what makes me unhappy is the collaboration that I seek with the lack of collaboration that there is, and what I really seek is that connection with businesses in terms of that dialogue, that where there's a feedback mechanism. I feel that there's a lot of knowledge out there, but that feedback mechanism does not exist. So where we can, go in and do more customization of cyber insurance policies for clients, I enjoy that.
Super, super interesting. And I'd love to wrap with a final question. If you could insure something fun, unconventional, whatever you want,
right?
What would it be?
What would that be? Interesting question. For me, unconventional. I reckon from a cyber perspective, it would be interesting to ensure maybe an organization, a large organization that, like a bank, for instance, that talks to a whole lot of people, talks to SMEs and, retailers. And it would be unconventional in the sense that you would have to provide every customer in the bank a level of insurance, but still have to provide the board with a level of insurance. So what would that be? I mean, it's really a big piece.
Kind of like you could almost do a subscription with your bank account. Like you'd pay a small subscription attached to your bank account, $5 a month or something, and with that came a level of cyber insurance. That would be super interesting, wouldn't it?
That'd be very interesting. I'd love to do that.
Meena, thank you so much. You have shone the light on maybe a poorly understood area that is growing rapidly, that people need to take awareness of. And Meena, I know that we'll put your details in the show notes, and so if anyone wants to drop you a line and talk cyber, I know that Meena will be more than happy to listen, pick up, and share the knowledge you have. So Meena, thank you so much for your time. It's been fantastic, and I really appreciate it.
Thank you, Nigel. It's been a pleasure talking to you, and it's always fun to speak with someone like yourself who's passionate about insurance and the value that you bring to the industry through your own business as well. That's really appreciated.
Meena, thank you again. So thank you so much, everybody. I hope you really enjoyed the episode. If you do want to see our faces, do jump into YouTube and you can watch the video version of the podcast. And as always, if you would like to hear more from industry leaders who are pushing the boundaries of insurance, please do check out other episodes of our podcast series, Building Tomorrow's Insurer. But for now, from Meena, from me, thank you. And if you jump onto the socials, follow any of the content, and have a wonderful, wonderful day. Thanks, Meena.